So, what if I told you that the same person who made one of the greatest investments in history also lost one of the largest personal fortunes ever and then did it all over again? Yeah, this is the story of Masayoshi-san, a high-stakes journey exploring that super thin line between genius and gambler, all playing out at a scale that's, well, it's hard to even wrap your head around. $70 billion. Let that number sink in for a second. That's the figure we're starting with. It's one of the single largest personal fortunes ever lost in history, an almost unimaginable amount of money that just vanished from one person's net worth. And really, that's the big question here, isn't it? How does somebody lose a fortune that big, then climb all the way back to the top, only to risk it all again? To understand this incredible cycle, we've got to go back, way back, to the beginning. Okay, so before that first epic fall, there was an equally epic rise. And honestly, it was all built on one of the single greatest investment calls in modern history. Back in the late 90s, Masayoshi Son, the founder of SoftBank, he made a bet, a big one. He put $20 million into a small, pretty much unknown Chinese e-commerce startup. You might have heard of it. It was called Alibaba. And that bet, it paid off in a way that almost no one could have imagined. When Alibaba finally went public in 2014, that little $20 million stake, it exploded to be worth over $50 billion. I mean, that's a 250,000% return. This single move cemented his reputation as a true visionary. But here's the thing about vision, especially at this scale. It often comes with extreme volatility. Just as Son's star was reaching its absolute peak, the entire tech world was about to get turned completely upside down. The dot-com bubble, it was about to burst. And this is where the scale just becomes mind-boggling. At the very height of the bubble, just for a brief moment, Son's net worth was actually bigger than Bill Gates. Think about that. On paper, he was the wealthiest person on the entire planet. And then, poof, it was gone. Now, after losing that historic $70 billion, most people, most investors, they would have retreated, right? They'd have gotten way more cautious. But not Masayoshi Son. Oh no. He waited, and then he came back with a plan that was even bigger, even bolder than before. He launched the SoftBank Vision Fund, and at $100 billion, it was the largest technology investment fund in history. It was designed to do one thing: pour absolutely unprecedented amounts of cash into what he believed were the next generation of world-changing companies. The strategy was, well, it was aggressive and breathtakingly simple. Number one, invest huge sums of money to basically supercharge a company's growth. Number two, move faster than any competitor could even dream of. And three, use all that capital to utterly dominate an entire industry. This wasn't just investing, this was a plan to literally reshape the world. And for a while, it really seemed to be working. The Vision Fund was making headlines, backing all these unicorn companies left and right. But pretty soon, that high-speed, high-spend strategy started to show some really serious cracks. And, no company exposed those cracks more than WeWork. The WeWork saga really shows just how fast this whole strategy could fall apart. So in 2017, SoftBank pours billions into WeWork at this sky-high valuation. By 2019, they're all set for a massive IPO, an initial public offering to sell stock to everyone. But the moment professional investors actually got a look at the company's real numbers, all that hype just evaporated. The IPO was canceled, and the company's insane valuation just collapsed. That WeWork disaster was a huge turning point. For the first time, people started asking some really tough questions. Was the Vision Fund's strategy actually visionary? Or was it just flooding the market with so much money that it created these inflated bubbles that could never survive in the real world? And just as those questions were echoing all through the financial world, the whole market started to turn. 2 decades after the first collapse, the stage was set for an almost perfect repeat performance. It was uncanny. I mean, look at this. The parallel is almost unbelievable. Over on the left, you've got the dot-com crash in 2000. A tech bubble bursts, SoftBank stocks crash, and Sun loses that $70 billion. Now look to the right, the tech sell-off of 2022. Interest rates go up, tech stocks get crushed, and the Vision Fund reports these record-breaking losses. It is literally the same pattern, just playing out 2 decades later.
And this brings us right back to the core theme, right? The DNA of his entire career. He operates with extreme conviction in his vision. That conviction leads to extreme exposure to these high-risk tech companies. And of course, the inevitable result of all that exposure is extreme volatility.
So what's the ultimate lesson from this incredible financial roller coaster? Well, it all comes down to understanding the very nature of these highly concentrated, high-conviction bets. It really all boils down to this one simple idea. Concentration cuts both ways. The exact same focus that turned a $20 million bet on Alibaba into a $50 billion windfall is the same exact thing that exposed the Vision Fund to such catastrophic losses when the market turned. It's a classic double-edged sword. Now, it is really important to be clear here. This is not a story about scams or deception or anything like that. This is a story about a specific investment philosophy taken to its absolute logical extreme. It's what happens when a powerful thesis gets backed by nearly unlimited capital. And all of this brings us right back to that core concept we've seen again and again, volatility. And we're not just talking about little ups and downs in the market. As this story shows, true volatility is about violent, massive swings, the kind that can create and destroy historic fortunes in the blink of an eye. Ultimately, the career of Masayoshi Son is a perfect case study of a fundamental truth of finance. The potential for enormous, world-changing gains often comes packaged with the risk of equally enormous, world-changing losses. They really are just two sides of the very same coin. Which leaves us with this final kind of haunting question. When you're betting billions and billions of dollars on the future, is there really a difference between being a visionary and being a gambler? Or are they just two different names for the same high-stakes game, depending on whether you win or you lose?